Sound check. Good to go. Yeah, no, good to be here. It's been a whirlwind. Traveled to San Diego. I was supposed to fly out tomorrow to Germany. I have canceled that trip. And for personal nice little spike. I was waiting to see if we could actually kind of get up there closer to plus 3 ATR. You can see we're actually taking out yesterday's low today. That's kind of a good trailing stop loss for a momentum trade. We do have, although we're down on this position today, we still have profits of about $1,000 on typically have more legs. So I'm just going to go ahead and book that. And then that'll leave me flat. The only other thing I was bidding on is Qualcomm, and that thing is just kind of taken off. So I'm just going to cancel that order as well. Right. Going to go ahead and close Uber out for about yeah, no, and it's one of those things too. Remember, we have had this kind of cycle high for September 19th to the 22nd. So here it is, the standing out there that you just want to know about. Because if you don't know about it, it's like, oh wait, why are we still going down if in fact that's the case? And then from there, just keep in mind the average squeeze last 8 to 10 bars were kind of in that range. Do I have that one? Yes, that we just kind of sell off the rest of the day is pretty high. Now that could change, right? But when you see this, typically that's walk down day into the very close. And so what we want to see then is, do we have, is there anything, are there any big targets like sitting out there, obviously in terms of support, or if there's big gamma levels or anything like that, and kind of get a sense of, and again, that's for today, but then we can also look at this from kind of a swing basis as well. And if we're looking at trace, 6650 is a big level. That's kind of where we are in terms of negative gamma. There's a lot of positive gamma through that we could just kind of soak through. That would get us to, and then there's a looks like 6620. So 6620 is possible. Doesn't mean it'll happen, but when you see stuff like this, generally the idea is we ain't going nowhere but down. All right. So that's kind of, and I'll talk about more about this tonight. This is something that, again, instead of trying to figure out what kind of day it's going to be, this kind of really gives you an idea of the buying or selling pressure and all that kind of fun stuff, which is cool. So let's see. Is there an echo? I shouldn't have two mics open. Oh, you may be. I don't have two mics open. Yeah. Okay. Yeah. Thanks, Henry. Yeah. Sometimes I will accidentally have two rooms open. Like I'll forget that I have it open, and I open up another one, and then I've got like Henry in stereo and stuff like that, and that's great for a few minutes. So let's kind of take a look here at. Well, first, obviously we've got a lot of positive things across the board here. No, there's no denying that, and I think and when I was talking about those cycle dates, it's either we're going to rally up into those dates, which I honestly didn't think we were going to. It's like, well, obviously we're going to sell off into those dates, but we rallied into those dates. If so, the possibility of a multi-week high is in place. I would have preferred that we sell off into that, because then it would have been like kind of the mother of all buying opportunities, at least for September, but that's all right. So then the question is from here is, what are some kind of key things that we want to look at? Almost everything here has been pretty strong. If we're looking at sectors, I mean, everything's green. We're a little mixed in some of the basic materials, and the only thing that's negative is consumer staples. Nobody's flocking to a safe haven of toilet paper and beer or anything like that. And then from there, we got a lot of, we got some squeezes setting up in financials, squeezes setting up in energy. Metals and mining has got a lot of squeezes in place right now, a lot of squeezes in utilities. And semis, of course, they're the ones that have been kind of leading the charge. Gosh, TSM, crazy move there. So not necessarily a lot of squeezes. There's one in MCHP, and then another one in ADI. So those are possibles. And of course, Meta's fired. Netflix does have a big squeeze developing, and that's a mixed one. We'll take a look at that. So there's actually a lot of squeezes right now, which is interesting too. Um, a lot of these squeezes, though, are on stocks that have kind of mixed baggage. AVGO, none of the Mag 7 really. And then let me take a quick look at the IBD 50 as well and just kind of see what's cooking there. Of course, IBD 50 is kind of its own planet. MIRM has a squeeze. WGS has a squeeze. You've got a couple that have dropped down to their 21 EMAs. So there's a lot of interesting things here. And I think we just really have to answer the fundamental question is, the SPX is dropping back to the 8 EMA. And in this particular case, is this a buying opportunity um, that we're going to hold the 8 EMA? Or typically what I found is when we do get something like this, where there's, for lack of a better word, one of these cycles in place, typically what happens is we get a little bit steeper drop. So the last big one that came up at the end of July, we actually dropped down to the 34 period EMA. And then we did that within a couple of days. So, again, keep in mind that if we're looking at this and the way it's going, then the possibility that we could come to the 21 or the 34 EMA is certainly possible. So all the fun things. And then from a day trading perspective, again, with this tool, again, I'll do a webinar on this tonight just to talk about what this means as I go through and I've tried to quantify this. But typically when I see this, it really just means that the weight of this market is so heavy is that when we pause like this, the odds of us just kind of rolling over and dying are pretty strong. At the very least, at this point in time, because the premiums are obviously going to be a little higher right now because we got a little bump here in volatility. At the very least, when I see that, it's like, okay, maybe I don't want to buy. What are we at? 66.50. Maybe I don't want to buy the 66.50 puts at $5.80 with 2 hours left. In case we flop around here, but I'm kind of okay with the idea of selling the 66.50 calls and doing it as a spread, um, with the idea that either we hang around here and close near 66.50 or that we fall lower. This could change, but right now that's the message that's being sent to us. So at the very least, let me go ahead and put that on. And then if for some reason it does kind of reverse or something like that, then we can work with that. So this $15 wide at this point is almost $7. That's a pretty fat credit. And I got 690. So let me just post that. Selling the 66.50 calls here as a spread with the idea that we close near 66.50 or fall further from here. And then I kind of like the idea of something just in case things get a little messier to the downside, but let's see. Yeah, so if that makes sense. So really just the idea here is like, okay, 66.50 is kind of a big level on spot gamma. Right now, the market pressure is showing pretty steadily to the downside. I don't necessarily want to buy a put that expires today because if we just sit here and do nothing, the put will just lose value very quickly. However, in this case, I do expect some back and forth. Maybe we touch 66.60 or so, but as long as the ticks are showing this pattern, we really can't rally. We would need, something like this formation if we're going to actually see a rally. Okay. So that's that. And so that's something that's just for kind of a day trade. And then from there, I'm also kind of interested in addition to some, I mean, there's some trades here I'd like to look at the long side, but I am also looking at some downside plays as well. Even if we just kind of pull back to the mean. Now, it doesn't mean I'm going to do something crazy like buy puts on Tesla, but I don't mind looking at some recent high flyers. IONQ, um, that one's been a little high. That change, what is, okay, there we go. MSTR, of course, more Bitcoin related. Looks pretty negative to me, but those aren't the ones I want to look at. Where did that one column go? DoorDash looks fine. And really with stuff like this, it's just kind of looking more at, you know, yeah, like MasterCard here. I mean, that's kind of, that's breaking through some barriers to the downside. McDonald's, of course, no matter what happens, it's going to be near $300. CRWV, kind of peeking out there a smidge. Forgive me, Elon, for I have sinned. Yeah, no, that's great, Shepard. Yeah, so you can short futures here too if you want to
It's
do that.
like
The call credit spread just gives us a little bit more, flexibility and grace. Yeah, so let's look at yeah, I should have Microsoft right here. All right, so let's look at Microsoft. Yeah, and so one of the things about Microsoft here is that, look, it's been doing nothing for a while. It had the prior earnings, it had this run, and it's still just digesting that move. And when I look at a stock like this and I see that the indexes are faltering, and Microsoft in this case, is kind of coming back down to the 21, it's kind of leading the charge a little bit. But on the other hand, so this is the tricky spot in the market. This is where kind of the cycles come into play, because it's like, well, the indexes are at the 8 EMA and Microsoft's at the 21 and there's a squeeze. And I'm always a fan of buying a pullback to the 21 EMA if there's a squeeze, assuming the S&Ps are in line. And so we're seeing signs that, let's say the S&Ps pull back to their 21 here. Well, Microsoft's going to keep on going down, if that makes sense. So if the S&Ps were at their 21 EMA, right, then it's like, okay, yeah, great. Let's look at Microsoft. But I would look at this as kind of, it's not bucking the trend. It's kind of the opposite of bucking the trend. It's a laggard. Nvidia here looks great. I would say it's just moving with the S&Ps. S&Ps are coming to this level, and so is Nvidia. Tesla, of course, on its own little rocket ship right here. I mean, this is, technically a bit of a sell signal here. I have, no interest in being bearish on Tesla, because there's easier ways to inflict pain on yourself. Of course, from a day trading perspective, it's fine. Meta pushing through its 21 EMA. So, and look, the squeeze here has actually rolled over a bit. So I am seeing a lot of opportunities here, more on the short side, frankly. So let me look at Meta. And again, this is all short-term stuff, right? Tomorrow could be different, but we're just, for all the reasons that I've talked about. So if we're looking at Meta and, something that we'd want to do maybe beyond this week, but I'm not opposed to, but let's look at next week. So, I mean, the at the money puts are $14, right? It makes sense. The expected move is $31. So not necessarily the trade I'd want to take on this. And again, this would be more of selling a call credit spread. Actually, even wouldn't be opposed to doing it for this week. A little bit shorter term. The tough thing with something like this, because A, if we're doing anything bearish, it's counter trend. B, down moves like this can certainly have pretty wicked reversals. And then last but not least, we just want to give it time to kind of vacillate back and forth. So on part of this, I look at this and say, okay, well, if the S&Ps pull back to their respective 21 EMA, that would drive Meta probably to 750. And I don't expect, anyway, blah, 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 blah. So at the end of the day, I would just look at again, trying to make it easy here. Instead of buying, sometimes on something like this, like, okay, I'm going to buy 10 puts, I'm going to sell 30 call credit spreads, and you get essentially it's the same risk reward ratio, and you just increase your probability of success. So just let me price that out real quick. Vertical. No reason to do anything $5 wide. So for $10 wide, $10 wide, you can get almost a 1-to-1 risk reward ratio. And you're selling it just basically slightly out of the money. I'll do a little bit bigger size on that. I think I can get 450. And then, nope, maybe not. Okay. For Meta, it is pushing through its 21 EMA while the SPX is still way above its 21 EMA. Looking for SPX to test its 21 EMA, which should pressure on Meta. Instead of buying in the money puts, I'm going to go with next week's at the money call credit spread. Nice. Okay. Thank you, Bill. All right. So we got those. Yeah, we can look at a couple of others. So Rocket Lab. Yeah, Rocket Lab was a nice one. What's it doing here? Now, Rocket Lab, look, Rocket Lab could care less what the S&Ps are doing, which is great. So on anything like this, where you've got a stock like this, any tests of the 21 EMA I would buy. And you can see over the last 1, 2, 3, 4, 5, 6 trading days, it's tested the 21 EMA each and every time. So, it's here. I just, don't think there's any reason to buy it right here. It could take off, but you just throw on another order and go fishing. The 21 EMA is rising, probably 48.50, right around there. Good entry there. So it just looks great. Actually, the upside, if you have it, I'd feel comfortable with it. For Hood, same thing. Hood doesn't care what's happening. And that's great. These are kind of honey badger-esque stocks. And what I added here, no, squeeze opportunity's already gone and all that kind of fun stuff. But if you have it, you keep a stop below yesterday's low and just see if this thing can keep going. So those are acting fine. WDC, again, acting fine. I would say just moving with the markets. Here's a stock that's been doing really well. And you just want to ask yourself, because remember, the questions about these individual stocks are critical in only how they relate to the S&P 500. Are they moving with the S&P 500 or not? If the S&P looks like, if this pans out, okay, we got a cycle high in place, and maybe we won't see new highs for a couple of weeks. Now we know in this market it's been incredibly strong, and maybe tomorrow there's a tweet and we're at new all-time highs yet again tomorrow. But if we're looking at this and kind of letting it work out a little bit, could the indexes actually test their 21-period moving average again? Then is WDC going to move with that? And so the biggest question we got to ask ourselves here is that if there's a stock you like and the S&Ps are down and the stock you like is down, we just want to ask ourselves, is it going to buck the trend? And I would just say that any stock that's moving down today is with the S&Ps and the NASDAQ is saying that we're not going to buck the trend. We are going to do whatever the S&Ps do. Okay. So when we looked at Hood, it's absolutely bucking the trend, right? When we look at Rocket Lab, it's absolutely bucking the trend. So they're in their own planet. That's great. So if I'm going to do something long, I want to do something with a stock that's just kind of, I'm just in my own world, man. I'm not sitting here, stuck with what the S&Ps are doing. So we got to just make that distinction. And so you just want to, ask yourself, like, if the S&Ps are trading at 6620, at the end of the day or tomorrow, is your stock going to follow it or not? Again, I'm just talking short term here, right? This isn't a about um, tomorrow's another day, right? But I'm just telling you that with the action today, and again, it's kind of interesting that we have the proponents here of starting after about 11:15 or so. It's just been walk down action, or 10:15. It's just been walk down tools all day long, and they haven't changed yet. Maybe they will. We'll keep an eye on it and see. Yeah, gosh, I haven't looked at SanDisk in a while. SNDK. Yeah, look, that one acts great. I mean, that's just kind of drifting up. In terms of a setup, this is always the interesting thing. What a great setup way back here. If I'm looking at right here, if you've got it, you just trail up the stops. Is it something where I'm like, oh my God, I need to buy it right here? I look at that and it's just like, okay, I missed it. And that's okay. So let's see now, if having said all that, let's see if there's anything we can see here that's setting up. Now, Monster has a squeeze and it's negative, right? So the squeeze technically is poised to go lower, which makes sense. That's kind of as classic of a bearish setup as you're going to find. I'd say MSTR is kind of a difficult one to trade. We'd have to do call coded spreads on that one too. But I'm not just looking, I don't necessarily want to just do bearish trades. It should, the feelings in the air, so to speak. But let's see if we have any squeezes that are positive. All right, so I like that Roku today is up on the day, i.e., it's bucking the trend of the indexes, and we're kind of at the 8 EMA. So I like that as a long. Again, not surprising. I'd want to see if we could get an entry at the 21, but that one's fine. Quite lovely. Squeeze, squeeze, squeeze. Oh, let's look at Netflix here. So this is interesting. So we have I've talked about this before on a squeeze. If you like a squeeze to the upside, it needs to be kind of perfect. Moving averages, stack positive, trend, all that kind of stuff. A squeeze like this is generally more bearish. Doesn't mean I want to short Netflix. So we'll just kind of keep an eye on it. Netflix, frankly, in this kind of a range, I like wide iron condors on it and just let it trade in this range. CRCL just has a little, yeah, that thing's, man, that's about as ugly negative of a chart as you'll ever see. After we just did this drift down and then little kiss and we're just rolling back over. We already looked at Hood. We looked at Roku. We looked at MasterCard, also pretty negative there too. I don't know what that is. S&P's little bounce here. Again, with this, the way that the internals are acting, that's a shortable bounce so far. Let's look at some of these. All right, so XLF, again, remember S&Ps are at their 8 EMA. XLF, pretty ugly reversal day down to its 21. And you have a squeeze setting up. It's a bullish setup. Again, keeping in with the context of it's leading the way lower. So just some nuances today in the markets. That's banks, healthcare, kind of mixed. I don't know what you do with that. Industrials, pretty positive, basically moving with the indexes, right? Their indexes are coming back to the 8, so is industrials. So they're moving with it. So go the S&Ps, so go the industrials. Energy is kind of its own bag here. Not a huge fan of the pattern. That's actually not bad. That's not bad. So energy, possible longs here. And then I'm just going to look at a couple of real estate, transports, bucking the trend a little bit there. Not too exciting. Micron reports tonight. Thank you for that. Ooh, that's kind of tricky. No, I mean it's not tricky. So when you see a move like this, it's actually kind of very similar to Nvidia. Is that has the move for earnings already been priced in? And so the expected move on this is $15, which seems kind of low. And so the question on this is just have these, has this already been priced in? And so when I see something like this, the earnings, even though they're technically not supposed to be disclosed, hedge funds and things like that, they talk to the channel partners. They do their own modeling and say, okay, based on what we're hearing, their earnings should be up by X%. So when they get that, when their internal analysis gets that, then it's like, great, let's push this, let's buy more of the stock. And so when the earnings comes, it's the earnings kind of validate and say, yeah, you're right. And then it trades within the expected move. So when I see something like this, my general inclination, this is what we did within, I think with NVIDIA, we actually even aired on just this on the selling calls. But my general inclination is to err on the side of the market makers are right. Like they've got this one figured out. And so if we go to up here and say, okay, let's call it 165. What are we at? 166.42. Man, the liquidity on Micron is awesome. And then just say, okay, so if we just did like say an iron fly, and typically, I like to price it a little wider than the expected move. So 20 points. And again, then we just kind of see what kind of risk to reward do we have on this? Like, is it worth it? And look, $20 wide. So you're risking, your max loss is $7.50, give or take, against a max profit of, so on a one contract basis, your max risk is 700 and change against a max profit of 1200 and change. And then of course, realistically, you wouldn't get max, you could get max loss if it opens up twice the expected move or down twice the expected move. But if it's within range, you typically have some time to kind of work it and stuff like that. So that to me seems kind of, that one seems kind of interesting. And then you just do the expected move. Market makers are smart like that. Let me see if I can get 1280. For MU earnings, playing with the market makers on this one. Stock has had a nice run into earnings, likely fairly priced. I'm going to do a fixed risk iron fly, $20 wide, to see if we can capture premium if it stays within the expected move. Really? Yeah, I've had a lot, Micron's been with me most of my trading career, because I remember even in high school, trading it. Yeah, and I think that they likely will beat as well. The question is it priced in or not? So remember, with earnings and things like that, it's not about if the earnings are good or bad. It's about what's already baked in to the pie. And so if we go to Nvidia, Nvidia had good earnings. And did they explode after earnings? No. They were, they kind of didn't do much the next day, right? And so that's just the idea. I agree. I think they're going to have good earnings. And so the question is it going to be like is it going to be earnings like Oracle, where it's completely surprising. It's a complete surprise and heinous announcement that nobody had priced in, or is the market taking into account, man, they are selling a lot of HBM chips and Nvidia and AMD absolutely need them. So let's start buying the stock because the earnings are going to be good. So that's really just the game. It's the idea that the earnings are going to be good. Yes. And then just are they going to absolutely blow out expectations in terms of what's already been priced into it? Or is Micron now kind of fairly priced with the recent run up it's had into earnings? And that's just the question. So what I like about something like like this is just saying like, okay, yeah, if this thing explodes higher, I get it. This company's doing well. Um, but our earnings fairly priced. You can see the last earnings is kind of like, oh yeah, okay, we just kind of hang out here. Anyway, yada yada yada. But that's the reasoning behind the trade. So just to be clear that even if it looks like it would have good earnings, the idea that we say buy calls $20 out. The potato king who started my billions. All right, CBOE. Yeah. S&P is trading 66.58. Kind of see how they settle up in here at the top of the hour. PSX, Chevron. I mean, look, Chevron here, it's been slamming into its fire line. I think in just terms of a quiet trade, the idea of rebuying Chevron here, even gosh, if it could even come a little bit lower and then just flipping it back out there, that's kind of a nice trade because it's not really dependent on what the S&Ps are doing. Energy kind of does its own thing, so kind of a nice thing there. I was interested in, did we get to metals and mining yet? There's so many things in metals and mining. Let's see, ADI. Oh my gosh, I think my first laptop was a Compaq. I think I always stuck with Dell since he was in Austin. Yeah, ADI, nice squeeze, moving with the markets. Qualcomm, funny, I was trying to buy that, but it just took off. It's all right, we'll keep it on the list. Microchip has a squeeze, but moving, yeah, if anything, if the markets go down, is Microchip going to go back to that fire line? Is what that looks like. But again, I hesitate to do anything bearish with anything having to do with semiconductors. Of course, they're not as strong in AI as everybody else. Meta, we already looked at that one. And in fact, we did a bearish position on that one. Electronic Arts. Look, yeah, Electronic Arts, highs of the day, could care less that the markets are down. That's it. That's an interesting long. We already looked at Nvidia. How's Apple doing? Moving with the markets. If anybody orders the new 17 Air, I would love to hear about it. It looks kind of cool. Like if I upgraded, that would probably be it. That would probably be the upgrade. I mean, technically I do every 2 years and I got the 15, but no rush. Okay, technology, Cisco. D, really? Okay, good to know. Loves the 17 Air. All right. I mean, that one looked pretty legit. And look at this, guys, on the SPX. So, it got a little bit of a bounce here, right? But man, this is just death. When you see this, this twofer here, the markets just can't get out of their own way. So, I mean, at this point, we would need to see some purple dots if we were going to actually get a rally. Ain't no purple dots. You got the 17 Pro Max? Okay. All right. I mean, I'll probably have to upgrade. I always like it. It takes a while though. Like I'll get my new phone, I'll sync them, and then it's like when you guys start re-entering. Maybe I think now they're gotten better about you don't have to like authenticate each and every app that you use and stuff like that. But you know, wham wham wham. First world problems. Materials. Oh, sweet. Thank you. I will save that YouTube video. Yeah, Grace, I need to get actually I just need to order a new Falcon. The ones I have are actually really good. They're a couple years old, but I'm setting up a kind of a trading office in Wimberley in a cabin, and we actually just figured out how to get point to point 400 megabytes MBS per up and down on point to point, which is great. Kind of a new development. Waiting for the iPhone 27. Okay, materials standing out there. Oftentimes just you kind of squeeze out, every last nickel out of that rally. And then the question becomes if and I say if when the S&Ps or the Nasdaq go through a normal pullback, then which stocks tend stand the test of time? And typically the stocks that move the hardest on the way up, meaning you know like Reddit's a good example of that. I mean, it went almost up 100% in 3 months. Those also come back the hardest. But the ones that were steady kind of gainers, um, Hood is a good example. It's not going crazy to the upside, but it's just being consistently well bid. So there's a big difference between being consistently well bid and entering that speculation phase. And if anything gets in high speculation phase, typically when the markets kind of pause, and yeah, I'm happy to be on the mic today when the market's pulling back. So, and there happened to be a cycle completion, that's completed yesterday. Typically that mix at least gets you that pullback to the 21 in the S&Ps. And that's, still a little ways away. Show. Rocket Lab looks good. We talked about that. WGS. Yeah. Selfies on there. Interesting. Google holding up well. Again, moving with the indexes. ATAT. It's funny, this stock, it's either never doing anything or falling. Like it'll move and then do nothing. Let's see, what is IREN? CLS hanging out. A-Lab. Rambus, that's a blast from the past. Yeah, so what I've been kind of looking at too is, the whole idea that walk up days and walk down days, they're always kind of easy to tell right after the fact. But just really trying to figure, how do we dial in that it's happening, real time in front of us as we speak. And, so some of the things I'll be looking at is just this combination of stuff where, you really need two things for a walk up day. And for a walk up day, these purple dots, they're part of it. But you also want to see this over here. But I'll talk about it. I'll definitely talk about it tonight. I think you guys will like the concept. 2-minute charts you can use more for day trading and reversals, and then the 5-minute charts are more for steady kind of walk down or walk up pressure. But yeah, for those of you that are interested, I'll go through the webinar tonight, talk about just it's really always about like I'll ask myself this question. It's like, okay, when we're in the middle of one of these huge days, how can you trust that what's happening is this it? Like, is this a big day or is it just going to reverse? And or it's like, it gaps up and you got 3 points and you take it, and then the stock runs up another 20. And it's just like, okay, how can we kind of get the idea early on that, wait, this is one of those days. You don't get that many of them. And so if you're locked in for those days, they can kind of make or break your quarter. And so it's just kind of finding, we obviously have tools, but it's like, okay, what is the thing that will help us most real time? So anyway, that's what we'll talk about tonight. Yeah, let's look at a couple of these too that you're mentioning, Jonathan. I'm assuming there's a link somewhere. If anybody has a link to the webinar. Yeah, great move. Great move up there. ASML. Geez, that's such a great move there. Yeah, and notice that RGTI taking off as well. And so, yeah, and keep in mind there are some actually fantastic speculative stocks still alive and well. LRCX coming back to life. Clack, $1,000 on Clack. That's so awesome. Man, that had the longest consolidation at 15. This is one of the benefits too. Sometimes it's just like, where you're trying to trade those shorter term ones. And if it's like, you buy the leaps, you just wait, or you buy the stock. Well, for short-term longs, I kind of like Uber was the last one I'd been holding, and I'd been trying to get Qualcomm. So, right now I'm in the short term, long-term longs, of course, all the same things like AI, robotics, and all that kind of stuff. RGTI is interesting here. If we look at this and let's bring up the momentums. This is on this. Oh, thank you. Yeah, this is a kind of a yeah. This is just such a fantastic pattern here. It's such a fantastic move. RCAT too. Yeah, I kind of lightened the load on Friday because I knew I was going to be traveling. Um, I'd still like to have RCAT though. SKYT. Nice. Yeah, so again, it's an interesting market because, we have a situation where stocks, are pulling back. And again, this what we're seeing right here is that we're not going to rally into the close. This is something where either we close near 66.50 unless this changes, or it's possible we puke it up another leg down into the close. This typically means that this is just a pause before the next dumperooski. I was looking earlier. Gosh, what was it? Yeah, on a day like this too, like when it gaps down, you're like, okay, am I gonna, are we gonna buy the gap down and try to fill the gap? Not if you see this. If you see this, it's a walk down day. Thou shalt not fight it. So sometimes you feel weird. It's like, oh, it gapped down. I don't want to short anything. You do on a day like this. And then anyway, I'll just well, it'll be, but that's what's happening here. So again, it's nice about it. It's going like, okay, at this point, the path, this is like because it's always like, okay, where's the, it's going to rally, it's going to go positive on the day, and but at least we can kind of see clearly some signs that it's like, this thing's gonna struggle, and I actually kind of want to get some out of the money, something lower. Cost Villa, are you talking about the SPX trade? Okay, yeah. So look, that's a great question, and so thanks for asking. So if you're looking at something like this, so this was that trade we put on, right? Now, look, if this thing, if the S&Ps go to 6620, obviously this would expire worthless, right? And that's great. But we don't know if it's going to go to 6620. And so we always want to kind of look at like what's, our risk and stuff like that. I have found as a general rule of thumb, kind of the idea of letting something expire worthless more often than not causes problems. And so then it just becomes the question like, what's fair? Because this is how you want to think about it. Okay. This is $15 wide. So let's say that this gets to $1. And then you want to ask yourself, would you put on a trade where you're risking $14 to make one in the last hour of the trading day? Because man, if that thing reverses, it's really going to kick you in the nuts. As Carolyn Broden would say, lift up your skirt and grab. Anyway, didn't mean to go down that path. It could kick you in an area that's sensitive, no matter what your sex is. And so, what we want to think about in something like that is just like, okay, if we sold it for 690, and we don't want to let it go to max loss, right? So, and at the same time, you know, having it go to zero isn't necessarily. So it's like, okay, on something like this, generally you think of it as kind of a 1-to-1 risk reward ratio. So, if you sell it at 7, generally what you're looking at is 690 in this case. Can you buy it back for 50% of what you sold it for? So if we sold it for 7, can we buy it back at 350? That also means that if you sold it for 7, if it goes to about 11-ish, you want to get out of it. So does that make sense? So as a general rule of thumb, if you aren't sure what to do, when you get into the trade, set an order to buy it back at like 50% of what you paid, what you sold it for. And then that gives you something to kind of work with. And so on something like this, calculator, so you just take your entry point in this case times 0.5, 345. That's kind of your target. Could you get more? Possibly. But could it go down in reverse? Yes. So I'm just going to do 345. And then if we want to, one thing you can do here, let me just check this real quick. Okay, that's working. And then we don't know, right? This thing may just make repair. But then one thing you can do is if say you get out of it, you could set up another trade, right? Um, and then the other thing is what happens if, maybe we do puke into the close. Is there anything interesting? 66.25. Okay, well, they're 40 cents. You could take some of your profits and maybe 10% of the profits and buy those puts at 66.25, and then if that goes to zero, that's fine. So that's how you kind of want to think of it. You're just managing your risk and stuff like that. So that's what we got there. Okay, so we'll work that order. Um Gosh, RGTI just powering ahead here. I'm curious, what's the highest? Oh, okay, 43. Sometimes if you see this like it's at 31, and if the highest strike, yeah. So if the highest strike is like 34, generally you're going to push through that highest strike. They got smart after GameStop, and then they started issuing more options to cover for that. But that's kind of interesting. That's how you get what's called a gamma squeeze. Yeah, well, end of day trade, I'm gonna look. As we get closer to. Oh God, it's already 2. It's already 2 o'clock. Time flies when you're having fun. So as we get closer to the end of day, like around 2:30 to 2:45, if I see an end of day trade, I'll post it for sure. All right. So right now, let me post the working now. Let me post this working order here. Working. Oh, did it fill? I didn't think we got that low. Oh, did you guys get out of it? I didn't think it traded that low, but I guess it did. Oh, maybe it just filled. Okay. All right. Exiting our call credit spread. Nice trade. Okay, that's funny. I was talking, I didn't even notice. So that was good on 10 contracts for $3,450. And then again, a large part of that, the reason I put it on was just simply this tool right here. And I'll talk about this tonight. In fact, by looking at what's happening here, I think my next step is I'm going to take a portion of these profits. So we got $3,450 in profits, right? I'm going to come down here and put some of those, not all of them, into some puts. And I'm just going to buy like, I'm going to put like $600 of this into the 6640 puts that expire today. Oh, they're already popping up. So that's too much. Okay, of the 3,400 in profits, I'm going to take just under a third of it and put it into these puts and just see if we get a bigger move into the close. And yeah, that's filled. Okay, so this is something where, is it something where if we get down to we're at 6640, so if we were to get down to like 6625, I would just get out. But we may not get down there, right? So that's where you're just risking a portion of your profits on this. Now, as long as we're staying like this, we actually have a chance of kind of falling apart into the close. So that's kind of why, I wouldn't just do this on any day. It's like, oh, we have this potential set up. So, let's do this. Okay. Taking 1/3 of the profits on that SPX trade and buying 6640 puts, target 6625. Ish. Yeah, look at that. So then, okay, so this, I appreciate the market helping me show this off. So when you get these yellow dots here, and then they're accompanied by the second tier dots, then that's really, 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 really great. That means you're just, you're setting up for, continued movement down, or opposite would be true, on the upside. We'll see. Obviously, the markets could just close here at 6650 too, right? But right now, we are showing the downside pressure. ALGM, yes. Yeah, it's interesting. Again, I would just ask on any stock right now, you have to ask yourself what your thoughts are on the S&P 500. I like the stock. I think that if the markets do pull back here, I don't see that one as fighting that trend, right? But I like it. Not bad. It's just hanging out here. All right, that's what I got. I think Danielle's on next, and I will hop off here. I will be around. I'm still grabbing slides for the webinar tonight. For those of you that are interested, I will see you at 7 o'clock. Otherwise, be hanging out and see what we got for the close.